Hey everyone, welcome back to Wealthy Business. If you're new here, make sure to hit that subscribe button and click the bell icon so you never miss our latest videos on finance, news, and personal growth. Today, we're diving into a major market event that's shaking the global economy. Let's get into it. U.S. stock futures tumbled on Monday as part of a global market sell-off driven by fears of a U.S. recession. Japan's Nikkei 225 experienced its worst day since the 1987 Black Monday crash on Wall Street, plunging 12%. Here's a quick look at where U.S. stock market futures stand. S&P 500 futures are down 3% after losing 1.8% on Friday. NASDAQ 100 futures are down 4.7%, with big tech stocks hit hard. Dow Jones Industrial Average futures are down 800 points or 2%, following a 611-point loss on Friday. The main culprit for this market meltdown? Fears of a U.S. recession, especially after Friday's disappointing July jobs report. Investors are also worried that the Federal Reserve is behind in cutting interest rates to bolster the economy. The Fed chose to keep rates at the highest in 2 decades last week. There's also an unwinding of the once-hot artificial intelligence trade. Tech shares were among the worst performers in early trading on Monday. Nvidia is down 9% after already dropping more than 23% from its recent high. Apple fell more than 8% after Warren Buffett's Berkshire Hathaway cut its stake in the company by half. Tesla is down 7%. Broadcom and Supermicro Computer are both down more than 9%. Global market reactions. In Asia, Japan's Nikkei 225 confirmed a bear market, reacting to the sour U.S. jobs report. The 12.4% loss was the worst day for the index since the 1987 Black Monday crash. This marked the largest points drop in its history, losing 4,451.28 points. Other global markets were also severely impacted. U.S. Treasury yields tumbled as investors fled to bonds, with the 10-year note yielding 3.76%, down from 4.20% a week earlier. Bitcoin dropped from nearly $62,000 on Friday to around $52,000 on Monday. Europe's stock 600 fell by 2.6% in London. The CBOE Volatility Index shot above 53, its highest since the early days of the pandemic in 2020. There's chatter about the unwinding of the yen carry trade adding to the global market decline. The Bank of Japan raised interest rates last week, causing the yen to rise in value against the US dollar. Victoria Green, Chief Investment Officer at G Squared Private Wealth, commented on CNBC's Worldwide Exchange about the market pullback. She noted the various factors contributing to the sell-off, including Berkshire cutting its Apple stake, the Japan sell-off, and the end of the yen carry trade. Green emphasized that this is a correction and expects markets to hit oversold levels soon. On Friday, the Nasdaq capped a third straight week of losses, bringing the index down more than 10% from a record set last month. The S&P 500 also posted a third straight losing week, while the Dow Jones Industrial Average snapped a 4-week win streak. Investors are also keeping an eye on economic data, including the July ISM Services PMI, which is expected to show a rise to 50.9, up from 48.8 previously. In a note on Sunday, Evercore ISI Chairman Ed Hyman acknowledged that recession signs are becoming harder to ignore. Adam Crisafulli of Vital Knowledge blamed the sell-off on investors unwinding their positions in top tech winners, but cautioned against turning too bearish too quickly. That's all for today's update on the global market sell-off. If you found this video informative, make sure to like, subscribe, and hit the notification bell so you never miss an update. Let us know in the comments how you're navigating these turbulent market conditions. Thanks for watching Wealthy Business, and we'll see you in the next video.